Hi, Nick. Can you hear me?
Yeah, hi Paul.
Hi, good. How's my mic? Is it all right?
Yeah, I can hear you. Obviously, you can hear me. Otherwise, you wouldn't be able to answer my question. How is it?
Are you still in the UK?
Yeah. Hi, Rani.
Hey, how are you?
I'm good. You're Hi, Shamit.
Hey guys, how's it going?
All good.
Yeah.
Shamit, it's difficult to see your face. Actually, don't know if you.
Okay, I'm trying to think what to do about that. I can see that. How do we do this? How's that? Is that a bit better?
Yeah, maybe the blind down. I don't know.
No. Unfortunately, it's just I like the light. There's no blinds on these windows.
Okay.
Let's try and do it that way. How about that? Maybe. Is that?
Yeah, I think if you're a bit closer, it would help. Yeah.
Are you guys good?
Good to go. Yeah. You've been listening so far?
A couple of the sessions in and out.
Yeah, exactly. It's kind of background noise sometimes.
Yeah, I think
But there's some interesting
some
points.
Yeah. Yeah, well, almost sounds like a lot of what we were going to talk about, though.
I don't know, actually. Well, maybe, but I think it's very specialist what we're doing. I think contextually, it's interesting. You know, that what's understanding what all the other markets are doing is important.
Yeah, true.
Mm.
We're waiting for Richard.
We are waiting for Richard, yeah. Don't text him.
I just did.
You just okay. I guess the thing is to have your microphones on mute unless speaking, obviously. Just to remember. I think it's just safer that way. Yeah, Shamit, you look like you're in kind of like silhouette. So, did Richard respond, Ronnie?
No, yeah, I can do it this way. Is that better?
That's better, yeah. It'd be nice to see your features, whether you're smiling or not. You know?
Oh, yeah. There you go. I just got back from the weekend of Vipingo, so I'm smiling.
Ah. So what did you shoot? You play golf?
Actually, yeah. The first decent round. It wasn't too bad.
How's the course?
Actually, so I hadn't been there for years, but it was actually in really good shape, and but it's I don't know. We played it a few years ago. I thought it was longer, somehow I'm hitting the ball longer. I'm not sure.
They've definitely made it easier. They've removed a lot of trees and there are a lot more houses. So when you do hit wide, you tend to end up not in the bush anymore. So you do lose less balls now, that's for sure.
That's exactly it. In fact, I remember losing a lot of balls the last time I played, and this time, went prepared and didn't and lost one ball in the water, I think, and that was it.
Hi, Richard.
Pretty impressive.
Hi guys, can you hear me?
Yeah, we're all good. Just saying, maybe best to keep mute unless you're speaking, probably as a
No.
general rule. I have no idea. Are we on yet? I guess we get Kafil will introduce us. Okay, so welcome to this panel session, which is entitled A New Dawn for Industrial and Logistics. Ben Woodham's warned against telling jokes without any audience response, so you'll be all glad to hear that I've resisted this temptation. So we have 4 exceptional panelists, all market leaders in their respective fields. Richard Howe, CEO of ALP, the market leader in speculative logistics development in East Africa with projects in Tilisi, Tatu City, and looking for additional sites, no doubt more of that later. We have Paul Williamson, head of leasing at Nairobi Gate, the new development in the northeast of Nairobi. We have Shemid Shah, the MD of UPS Kenya, one, if not the main logistics operator in Kenya. And last but certainly not least, we have Rani Nanji, the joint CEO of Tilisi Development, the major mixed use and master plan development in the north and west of Nairobi. So you will have heard, if you've been listening to these sessions early, you will have heard a lot this morning about the state of the market. Some of the panelists, I have to say, a little bit more optimistic than others. And if you're an optimistic one, then you certainly now be looking to invest in low-income residential stock to lease, probably serviced offices. But the retail and leisure sectors, of course, will suffer disproportionately until a vaccine has been developed for COVID-19 and widely dispersed. Retail, I think, will only really effectively accelerate the trend towards turnover rents. Really, tenants have always only been able to pay turnover rents, but the retail sector will just advance that particular cause. I don't know about logistics. Let's see about that later with the panel. Every crisis produces losers, but the creative entrepreneurs pick up the pieces with the abundant capital that is currently available, Middle East, US, Asia, a lot of people, a lot of money, cheaper asset prices. We've been heard about valuations falling for all sectors of the real estate industry, and more affordable borrowing. Interest rates have never been lower. And these entrepreneurs will steer the world in new directions at a rate that will be transformational. If you look at it, the tech stocks haven't really not only weathered the stock market storm, but their share prices have actually risen. And only today I was reading that Amazon, UK anyway, have announced free delivery for fresh food. So that's really going to shake up the market in the UK. And maybe that trend will accelerate in Africa. So hopefully the panel will enlighten us on the way ahead in the industrial and logistics sector. So without more ado, I'll go on to the first question, which will be, the answer will be led by Richard, but feel free to chip in, panel. We'll try and make this session as informal as possible. So we talked this morning, or we heard anyway, about the innovation in leasing terms. I mean, our warehouse developers and land developers, that's you, Rani, are you considering innovative lease structures to reflect the changes in demand? So Richard, maybe you could start by answering this question. Are you being a little bit more creative and flexible, such as in the retail sector, or are you being strict to your adherence to your investor principles of long-term leases at fixed rents and RPI uplift and US dollars, all the things that investors want, but the market doesn't really want to do anymore?
Yeah, no, I mean, I think we certainly have moved some way away from the strict sort of, it's got to be 5 years, it's got to be fixed, it's got to be all of those features that, as you say, investors love. But I think you've got to follow the market, and I think we've adopted flexibility sort of in both sort of directions, really. Certainly where we've seen tenants who are on the right side of the pandemic and a new situation where they've seen a big need for flexible growth in their business. We've let them use additional space on a flexible basis while they work out really where they're going to land post-COVID. And equally on tenants who are perhaps on the wrong side of it, you've had to be flexible with them in terms of dealing with them, as I think nearly all landlords are. But we've also, let it be known in the market that we're open to doing shorter term leases. It doesn't have to be 5 years. So we are approaching it in a more flexible way than we have in the past. I think some of the things you see in retail, like turnover leases, are a little bit more difficult to do in industrial. But we're open to discuss pretty much anything, really. We're trying very much to be open-minded about it.
I think you're on mute, Nick.
So if I was to come to you, Richard, and said, I don't want to do a 3-year lease, but I want to do a 12-month fixed and then a 3-month rolling break, will you demand more rent from me, or can I negotiate lower rent as well?
I'm not sure we would definitely do it for lower rent on that sort of basis. I mean, I think the obstacle for those really short-term type of leases, Nick, is on the one side, we're providing essentially a flexible speculative box, and what the tenant wants, even if he's in there for a short term, is to use that building to its full advantage. So he needs to rack it out. And I think one of the obstacles to short term in terms of our asset class, and I'm sure this applies in other asset classes, is, do I make the commitment to rack the building out on the basis only of a 12-month lease, or is the guy going to take the risk that he's going to want to keep rolling the building on and going to spend quite a lot of money on racking? I mean, there are more expensive forms of fit out in property, but racking is not cheap, particularly when you do it for fairly large spaces. But you do need it to utilize the building properly. So that's an obstacle you sort of have to overcome and find a way forward in terms of getting a working building.
I guess you'll rack out for tenants as well, won't you? And then
we will rack out for tenants, and we have racked out for tenants in the past, but that's against a long-term lease, and then you either agree that you're going to finance that over the length of the lease, or that you're going to do it as a one-off payment on a much shorter basis. But if you're dealing with it in 12 months, that's actually quite difficult to fit it into that sort of window. Yeah. But there are ways around these things. So again, yes, we would certainly not be closed-minded to anything. But I think if you're taking a fairly short-term basis, you might do it cheaper. But I think the tenant is also taking a risk there, because if you see a recovery in the market and then you come to a 3-month rolling basis, and they're committed to the building, do they want to be really exposed to what could be a sharp upward curve in rents? Yeah. So it cuts both ways.
Okay, Shamit, from a tenant point of view, you occupy leases and space. So how are you approaching your landlords? I mean, are you trying to renegotiate all your leases like retailers and office tenants, or are you taking a long-term view?
Actually, it's been a little bit the opposite. We've had an upsurge, and perhaps exactly what Richard was talking about. There's a lot of clients out there who are stuck with stock or are having challenges with distribution and need a short-term solution. And so I think as the logistics and warehouse solution provider, we fill that gap between perhaps the smaller end users and then the big warehousing landlords. So we've actually been taking up a lot of extra space, but giving clients the opportunity to come in on an as-is basis and take up space on literally daily, weekly basis on their demand without any long-term commitments.
Okay.
And I think that's a trend. People are less prepared to make those long-term commitments or long-term financial commitments. So they like that flexibility. Okay.
Do you see this trend accelerating? Do you think we're going to go back to pre-COVID, or do you think this is here to stay?
I mean, there's definitely a big trend towards more outsourcing. So customers that used to do a lot of their own vertical integration, their own warehousing, their own distribution, are prefer and are looking for service providers. So I do believe that this trend will definitely continue, which means if you will have more demand for aggregators, the people who can actually give you that service, which is also more or less logical process that you've seen happening in the West, in Europe, and the rest of the world, where a lot of the logistics services are outsourced.
But if you're taking the other way, so moving up the chain, are you finding that are you taking on more space, so you're leasing more space, and are you able to negotiate better terms because you're leasing more space because of the weak market or weak economic climate, shall we say?
Not really. I mean, so I think a lot of the landlords, especially in this market, are not under pressure. They're often ready to sit on empty space. So we haven't seen a major reduction in rates at all.
Okay.
We're also based at the airport, where there is a premium on space anyway.
Yeah. Okay, I understand. And Paul, with your project at Nairobi Gate, how are you seeing the market there at the moment? And are you offering new terms and to encourage tenants to go there?
I think what's really important to realize, I think, at this stage is that the market, particularly for modern warehouses, the fundamentals are still very strong. I mean, there is still a huge demand for modern warehousing. So from our point of view, of course, people are coming in and seeing if they can get a better deal. I mean, that's normal in using COVID. But I think in terms of where our position is still very similar. So I think that's fairly strong. But I think, exactly what Shamit said. I think that where we are seeing the demand from our clients particularly is more on your flexible space. So for us, they're sort of saying to us, could we up and down in terms of amount of space? And that's not something we would offer, but it's now giving opportunities to the 3PLs to come in and offer that to their clients. So they can come and look at a market on long term and say, we would probably estimate we need this amount of space, and then they can offer the space then to their clients. So I think from that point of view, we are having those sort of discussions as opposed to really being able to drop the rents or drop prices. It's more from the fact of how do we change it up from a flexible space? How do we allow for the fluctuations on leases? And just really better entry offers rather than long-term offers.
Okay. And Rani, you come from a slightly different point of view, but obviously, you're in the business of selling land. But are you able to offer different ways for end users and developers in the industrial and logistics sector to develop, maybe on a long-term lease structure or a lease structure as opposed to purchase structure? What are you doing about how are you managing in this market?
So I think that all of us have to think of innovative ways now that of doing these things. So we're looking leasing land to small entrepreneurs who want to start doing a small business out of a container, things like that, which is not, they just can't afford to buy land, warehouses and operate from this. So we're happy to, we have an area, whatever you want to call it, an entrepreneurial area that we're happy to lease land, make sure they provide all the infrastructure for that, to allow that to happen. So from that perspective, we're as much as we can encouraging that kind of the small manufacturer, the small entrepreneur to come in. And also we are very happy to innovative ways to maybe partner with developers where we also can put in a bit of the land and someone like ALP or whoever it is would put up a box on top and work with tenants to make it work for them, right, in a kind of a long-term structure. Unfortunately, that, as far as I see it, we can work on long-term payment plans as well, but there's not, I don't see there's a lot of room to move there. There's a few structures we can work on, and yeah, we're very, very, very open to that. But that's kind of where we're at the moment. Yeah.
So in conclusion, it seems like landlords are being a little bit flexible on tenant lease terms, but actually the market's quite strong. So there's probably not a lot of negotiation on the actual rents. That seems to be the kind of summary. Moving on then to another question, which is about development itself and construction. A lot of discussions I know about some of the problems that have occurred for developers in the supply chain for construction, material shortages, labor restrictions. What's the impact of that? Maybe Paul, you could give us your opinion about in Nairobi Gate, where you've got construction on site. Have you had impact through supply chain issues and disruptions?
Yeah, I think if anyone says they haven't, I think that's probably not necessarily the truth. I mean, all construction companies are used to, cyclical shortages in some form. But the spread and the strength of which COVID has sort of hit has been unprecedented. So, I mean, most supply chains are under threat in some form. Manufacturing, processing is stopped in a lot of parts of businesses. Logistics are seriously unreliable now. Some stopped altogether. I mean, if you break it down, it's just really one part of the chain within the whole sector can compromise your whole timeline, your whole thing. So that's extremely.
So what can you give some quantity of that? Can you give, if it's an 18-month contract, say, what's the delay?
Well, I mean, if, for example, if it's to do with you need international input from labor or from materials, whatever it is, then, I mean, it's very difficult to put a timeline on it. I mean, for us, particularly, we've had to look at alternatives. So if we went down the route of actually using what we needed to from an international perspective, we'd still be sitting on our hands because we couldn't do it. We may be waiting for the 1st of August, but even that is uncertain. So we've really had to redesign everything and look at it. I mean, in terms of timelines, really is how long's a piece of string on some of the stuff. Okay,
because so Rani, I know, Richard, you're under construction or completed phase 1, I think, at Tbilisi. So what was the delay there? Any delay and how did you manage that? And then maybe Rani, if you can follow on for Richard with your comments on the same project.
Well, we're still building phase 1 at Tbilisi. We have held on to our construction completion date, which is October of this year, which is a credit to our team. But I mean, Paul's absolutely right. If anyone tells you it's straightforward, they're deluding possibly you and possibly themselves. We've had to spend a lot of time looking at alternatives and substitutes. And we were, I think, very fortunate that 1 or 2 critical suppliers in Kenya reopened at the time. Otherwise, we would have missed our dates. We're now at the point where we know we've got everything we need in the country, and therefore we can complete on time because it's not that far away. But it's definitely been touch and go on occasions. And as Paul says, you've got to look at a lot of substitutes, and you've got to think laterally about what you've done. And ultimately all of this costs a little bit more money than you originally planned. But I think that's all part of the rich tapestry of property development, really. So you've got to try and suck that up and get the product to the market. Certainly, as we talked about the market, we're still getting market interest, certainly got strong market interest up at Tbilisi. So we're keen to do everything we can to get the buildings up and deliver on time.
Rani, do you want to add to that? I know you got some ideas.
So, yeah, I mean, I think from our perspective at Tbilisi, obviously ALP has been moving on, I would say, quite swiftly with their development. And at Tbilisi, we've been doing our kind of phase 2 infrastructure to opening up our residential and commercial precincts and doing our own housing project. So in terms of the bulk infrastructure, there's been a few complaints, etc., from the contractor, but really that hasn't hampered, and our the efforts have not hampered because of COVID, right? There's no real change. There's sometimes shortage of skilled labor coming out of Nairobi or going into Nairobi, that kind of thing, but not really much. And on the housing, I mean, I think we've been really fortunate to make sure all our tiles and lamp or wherever we're getting it from we've managed to get it. So actually our timelines haven't changed at all pre-COVID to now. So we're working with the same completion dates. So we have been fortunate, and I can see potentially on things coming in from the port, etc., in future, it might be an issue if this continues. But for now we've been actually quite lucky.
Well, I think I mean, you make your own luck in these things. So I think it's probably to do with relationships and on the supply chain that you manage the success. So moving on to another question then, in terms of the third-party logistics. Jeremy, you kind of indicated earlier, touched on it, but this is a sector where everybody's hanging their hat, I think, on as one of the growth areas. So are you going to tell us that this is what we should all be doing, or you don't want any competition? You're saying it's going to tell us it's really hard work, you're not making any money, or how are you going to present to us the real situation? Because that's what we want to hear.
It's so, I mean, we won't mince any words. The last 3 months have been tough. It has been unprecedented. Everybody uses that word. There's been a lot of disruption. I think that's actually thrown up a lot of opportunities, because if you can still deliver and maintain the supply chains in the middle of all of this chaos, then I think you proved yourself going ahead. And logistics is the backbone of pretty much everything. So it is a growth area. I think there's lots of space in it, actually, because good quality logistics services are still hard to find. Reliable partners who will actually work with you and develop with you and manage your supply chains are few and far between. And and I think it's also, and it's sort of touching on the next question, but I don't think the focus should just be on Kenya, but should really be in all of East Africa.
Do you see any new players coming in to this market?
So not very many. So you have the traditional players and the well-established ones, but at sort of the level that what ALP is developing, you would expect sort of service providers of similar levels to be coming in, and you have seen a few European investors coming in, partners or big logistics companies, but overall, I think there is still a big gap in the market. And but interestingly enough, we've had just this week some interesting inquiries from a lot of pharmaceutical companies that we work with, asking us to step in and take over their warehousing. So they have their own warehouses, but they want us to run it and manage it and actually do all the logistics part of it. I think that's where we're going to see a lot of potential for growth, and that's where these new developments are very, very important, because everybody has focused in the industrial area. That's where all the warehousing has been traditionally. It is not the logical place to have it anymore. So now once people start understanding that it's better to move location, move to better placements, especially in terms of infrastructure, then you will see a lot of growth.
I mean, normally in a market like this, you would expect to see new players coming in, but I guess it's quite hard to gain access to the market and to the supply chains that you've created. But I'm sure there'll be some people thinking about it. Richard, do you want to add anything to this? Because obviously you deal with the operators, and how do you see? I mean, you talk to them every day, so you obviously get pretty good feedback. What's your reading about how this is going, and are there opportunities? And what about yourselves, for instance? What about you? Going with a vertical integration.
Yeah, I mean, in a past life, we certainly vertically integrated into a 3PL. I mean, and that is one possible solution. I think. Listen, I think when you're trying to construct a complete, efficient supply chain for a whole region like East Africa, we're very proud of the buildings that we build, but they're not the complete supply chain. You need users who use those builders properly and use those buildings properly, and then you need a transport fleet to go with it. Once you've got all those things, then you get an improved supply chain. The 3PLs are the natural users of our buildings in many cases for that very reason. Certainly, we've been, I suppose the fair word is disappointed about the level of international 3PLs in our buildings to date. We do have 3PLs in our buildings, but they're more local 3PLs rather than the big international names. But in a similar way that COVID is accelerating lots of things, and we'll touch on more of those later, I think. You're also seeing, I think, that some of those 3PLs are now getting a lot more interested in actually getting into proper buildings and upping their game. And I think the fact that some people are on Class A buildings makes it more difficult for the ones that aren't.
So Shamit, why weren't you going to ALP? Why won't you take up Richard's offer of space? You know, he's got some spare capacity apparently, not much.
Yeah.
So we actually had a good discussion with them. So we've got a big facility at the airport, and in the end we took up pretty much all the extra capacity that was around us at the airport. It was just it was more logical and convenient. But I believe Richard's developments, when you get a big multinational coming into the market who wants bespoke type of warehousing or potentially an e-commerce solution, this is where it makes sense to go there, develop almost a standalone solution for one or two clients, and have a very high level spec product for them. So the time that we were actually talking to them was for a particular client. Unfortunately, it didn't come through. But I do believe at some point we will be talking to them again.
Well, if you've taken up all your spare capacity, it means that the next growth means that you don't have any spare capacity, I guess. So you got to look for it. What about Paul? Are you finding any 3PLs coming to you for occupational demand?
Yeah, I think there's a lot of our interest is coming through that way. I think mainly driven by client demand for actually wanting to reduce the risk of them managing their entire stock or their distribution. And I think not only international companies but local companies are now seeing the benefit of being able to get somebody who's experienced and has the know-how to run the operation and distribution. So I would expect more and more to come. And COVID has played an impact on that. Okay,
so moving on. Okay, so a lot of people, and question from the audience as well, which is about location, and it's one we were going to answer anyway, because, so we're all a bit Nairobi focused, I guess, but I know, Richard, you've been looking around for other locations in East Africa, and Shamit, I know you're involved as well. So Shamit, do you want to start and just tell us where you think the growth area is in East Africa?
So I think Nairobi is obviously still the logical central hub, but the growth area in terms of the markets that are growing very, very quickly is Ethiopia. Obviously, Addis is incredibly growing exponentially, and hard to find any reasonable, good quality warehousing or infrastructure. So that's a big opportunity. But we see pretty much everywhere, Kampala, Rwanda, Tanzania, Dar, all of them are big growth markets. And I think one of the ways that we have helped clients get into this market is give them a bit of a hub and spoke solution. So give them a big warehouse or main warehousing facility, say out of Nairobi, but then smaller hub facilities, spoke facilities in the surrounding countries.
Yeah, Richard, do you want to add to that? Because I know you've been looking in various countries. I know on your business trips to Rwanda and elsewhere. So how successful have you been, and where do you think, because we're in the post-COVID world now, or what attracts you now? What location?
Well, I would certainly echo that. The Ethiopian market is probably the most exciting for us, so we're looking at that very hard, and we're certainly talking very seriously to some people to do a development up there. There's a big gap and a big demand out there, so we would like very much to get into that market. I think Addis stands alone in terms of the logistics of the region, so it's not part of that hub and spoke that Shamit was talking about. But if you look at Kampala and you look at Kigali, then certainly we sort of look at that as part of, a chain of warehouses for the region, either being serviced out of Mombasa or through Dar. So we're certainly looking at Kampala, we're certainly looking at Rwanda. We're a bit more cautious about Tanzania and Dar, simply because the environment there is a little bit less conducive. But yeah, we definitely see synergies,
when's the next-
synergies into
when's-
those
when's the-
landlocked countries.
When's the next announcement, Richard, of the next ALP development?
Well, I'm hoping no pressure then. I'm hoping very, very much to get some deals signed in at least 2 of those territories this year.
Okay, excellent. That's well, that's good because that shows growth and development and activity. So, looking at Nairobi, I guess Paul and Rani may be a little bit influenced by their existing projects, but do you want to add anything, either of you, to that discussion, or you?
I'd like to just ask, like Richard, if in Ethiopia and Kigali, are you looking at like similar like master plan developments like Tatu and Tilisi, or are they standalone pieces of land where are you looking?
I think we are definitely seeking sort of master plan type developments. As you know, we're big fans of that sort of thing. For us, that manages our returns, it manages our risk. Where we can't find those, then we're looking for a strong local partner to JV with in order to sort of help mitigate some of the risks that you get into when you can't find a master plan type development. So we're looking at those two different ways of looking at it. So we're trying to be flexible depending on what's available in the market. But we've looked at other markets where there are master plan developments, and if we could make them work, we definitely like the master plan approach. As you know, we're big fans of that in terms of risk.
Okay,
risk
what are
management.
the big advantages of master plan over a standalone?
Well, for me,
How do you see it?
Well, for me, it is about, yes, you do pay more for the land, justifiably. But for me, my investors are looking for a certain return on capital, and if the land acquisition process, unfortunately, in these countries, including Kenya, is out risky business, and that makes getting those returns very difficult. So, frankly, when you do the maths, from the perspective of our investors, it's better to pay more and get a much faster turnaround on your capital. And sadly, as we also all know, there are the risk on title and land in Kenya doesn't necessarily go away straight away. So again, it's about managing out that risk. Title risk is an absolute killer for any property developer. So anything you can do to mitigate that is got to be seriously considered. And the master plan developer, ticks a number of those boxes for us. So that's always going to be a preferred option for us.
Is it?
But I think it's worth pointing out that
it is.
both those countries, Rwanda and Ethiopia, have done an incredible job of setting up planned developments by government with zones that are dedicated with all the infrastructure ready to go. And so I think those are well-planned master plans that already are in place and existing.
Yeah, I'd endorse that. I think both those governments are really serious about attracting investment and getting people to do it. They are both very organised and very focused on that market as well.
Rani, I know you might be biased on this, but do you want to add? Do you want to quantify? Well, what's the cost of the extra benefit? Do you reckon?
Well, I think that there is, and I have this, this pitch that I do to my potential clients all the time, is that if you try and do it on your own next door and development, you are spending far too much time, money, and effort to get what it is that you need. So even in terms of not even just infrastructure build, but dealing with the counties, dealing with the environmental guys, dealing with KPLC, dealing with all that. So I think that scale development for sure, being able to bulk power, bulk water, etc., into the development. So you definitely get that benefit. Yes, you may pay. It may look like you're paying a little bit more for it, but when you go and do it on your own, it actually does cost more. And also, as a developer in a master plan development like Richard, you don't have to worry about the fact that I'll maintain your roads and I'll give you water and I'll give you power. You know, you don't have to worry about that because that's my problem. So I think that, you know, it's always, because they're so rare, these master plan developments, at least for, you know, for now, it's still quite rare. And I don't know, Paul, you may find that as well in your development. But I do think that slowly the developer or developers of ALP will soon understand why it's so much easier to develop in a master plan development rather than standalone, because you do deal with a lot more hassle. So,
Paul, what do you find any resistance from potential occupiers to the added service charge, or are you and developers, or well, you're doing your own development, so slightly different, but.
There's always a level of education that you have to, you know, give across. I think initially people are like, oh, they seem high, but I think if you look at it in terms of the scale you get from a big development like that, and the fact that it's something that we have done for, you know, many years, we know where, you know, you need to spend the money on the infrastructure and where there's places maybe you don't, and all of that is then essentially passed on to the client. I mean, the backup of all your utilities and your provisions is a real money changer, because at the end it's gonna impact on their pockets, and I think that's what's eventually they'll understand that, and it's something that'll have to be the same for everyone.
Okay, so basically you get more and you pay less, arguably.
Yeah, absolutely.
Although in the shop window it might appear to be that you're paying more, you actually pay less for certainty as well, for delivery on time and on cost as well. Well, okay, so we talked all about logistics, but manufacturing is also a sector, you know, that you know, maybe local manufacturing in the post-COVID world will actually increase, because you know you're less going to want to be less reliant upon imports. And so, Paul, do you want to see what you're finding is the current influence, and how do you see a trend going forwards with demand for manufacturing space, new manufacturing space outside the industrial area? Shamit says that the industrial area has really passed its sell-by date, and we're looking for new locations now.
Yeah, exactly. I think a lot of what we've touched on is the same on your warehousing as for your manufacturing sector. I mean, obviously everyone knows pre-COVID manufacturing was growing quite substantially in the country, mainly because we're doing more to our raw materials now in terms of processing and manufacturing before we export. Higher costs of import and difficulties in getting through the port is making the costs increase daily. So there is a lot of demand, and obviously bringing manufacturing, they need to store their goods either before they get to the client. So there is always going to be a demand for warehousing on the back of manufacturing. Post-COVID, or as we are now in it, I mean, fairly obvious that I think the manufacturing sector is going to have some form of hit, not all. Some of it, the traditional maybe, some of the newer ones will grow. You know, some potential expansion plans are on hold, possible downsizing. But on the positive, I mean, there's government initiatives now for investment, for consultancy, and not just from necessarily local governments, but mainly from international governments in form of aid. So that's bringing a lot to the table. You know, there's a lot of existing projects now that have approached us that maybe wouldn't have before. Investment for, you know, particularly in things like pharma investments and that sort of sector. But I mean, yeah, and again, touching back on flexible models, I mean, I think we're going to see a much more demand on that because they'll need to, you know, reduce costs in certain ways. I think that's, for us, what we're seeing on a from the manufacturing side.
Okay. Let's move on to, is anybody, yeah, sorry. Rani, do you want to say anything about the manufacturing sector? Are you seeing any more demand for manufacturers as opposed to logistics?
We have, there have been a few manufacturers who are still looking, who, you know, some who have put everything on hold a little bit because of COVID, others who are still looking, and their reasons are still the same as what they had before pre-COVID. They're like, you know, they want to move away from industrial area. They want to have space. They want to have room to expand. They want to plan their manufacturing in an organized way rather than, you know, it's a little bit haphazard. So we have had some, and on the flip side, there have been some that have been put on hold. So, you know, it just depends on the industry.
And Richard, you mainly logistics operators, isn't it? I think for you. You're on mute, Richard. Mute, Richard.
Sorry. Yeah, we speak to some manufacturers and certainly some who have specific healthcare sort of uses, have anything a bit of sort of accelerated their plans slightly. Others, I suspect, have been put back slightly. But I mean, if you look at the amount of building that's now going on in the tattoo industrial area, it's clear that, you know, people haven't been put off their long-term investment plans. They're people who've been putting together their manufacturing plans for a while, are just proceeding regardless, really. They're just taking that long-term view that it's going to work and they're going to come there. So I think for some people it slows down, sometimes some people it speeds up. And I would echo what Paul said. I mean, I think there's this sort of chatter you see in the press about a lot of reshoring or local manufacturing in order to make the supply chain more robust. I mean, I think in many ways, actually, having a proper warehousing resource makes you more robust anyway. I mean, it makes no sense for every government to build a huge manufacturing base, to build, you know, a medical PPE when you're going to wait 9 years making a loss for the 10th year when you finally have a problem. Where actually the solution is to do a distributed set of 3 warehouses around the country and just stuff them full of PPE. That's a much cheaper way of having a robust resource than doing a manufacturing base. So there's a number of different ways of looking at that. But, you know, both of those feed into the sort of demand sectors that we deal with. So in some ways, it's a win either way for us.
Okay, good. Okay, there's lots been talked about in the media for a while, actually, about the impact of e-commerce. Richard, you got, I think, Copier at Tatu. How does everybody see the way forwards in e-commerce? And is this really going to accelerate post-COVID, Richard?
Yeah, for me, that's an emphatic yes. I mean, I think COVID is just one of those accelerators. I mean, I think Copier, who are one of our tenants, had a very strong business model anyway. They had a very efficient solution for dealing with e-commerce in the African environment, and their business has, has exploded forwards in the COVID. Their warehouse at Tatu in the mornings is immensely busy, and I know Tim Steele and his crew are adding capacity and new distribution points as fast as they possibly can. But I don't think it'll just be them. I mean, I just think people are coming up with innovative solutions for the features of the African market. You know, the lack of postal addresses, using mapping technology instead. But I think it's an inevitable acceleration, and we're certainly talking to people. And I think that's a huge growth area for our type of asset.
And Shamit, do you see the same thing?
I totally agree. I agree 150%. I think, again, a lot is going to also depend on the logistics solutions, because having the right warehouses was one part of it, but getting the product to the rest of the country is the other part of it. So having the right service providers who can deliver to pretty much everybody, everywhere. And that's a question of scale. And that's been the problem, I think, up till now, but it's coming. And then when it tips, it goes very quickly. And there's a huge upside.
How are you going to deal with the last mile delivery? I mean, we all have postcodes in the rest of the world, but obviously it's a little bit more difficult in East Africa. Well, how do you see that? There have been lots of solutions bandied about. So how do you currently deal with it, and how do you see it working in the future? Where do you see the solution?
I think the solution sort of blended approach. So I think generally in Africa, lots of India, there's a lot of places where you move towards drop-off points, as opposed to trying to get to that final last mile. And so people, if you can get to I would say the nearest town or the nearest village, and you have a network of drop-off points, it makes it a lot more efficient. So that is one of the ways that we move forward. The other way is a better your GPS coordinates. There are some systems out there now with the mapping capabilities that we have that allow you to deliver very efficiently to pretty much.
Are you using them? Are you using these maps?
Yeah, we have our own app.
Okay.
So we have an app where you can actually put in a location very, very simply, and that way it's literally a pin.
Okay, it's a pin drop on a Google map.
Effectively, yeah.
Effectively that. What about these pickup points? Would they be in shopping centres? Do you think it's a solution to some space in shopping centres, or are you thinking more industrial areas, or how do you see it?
Everything from your your Safaricom or Airtel partners who pretty much have some of the best networks already that exist, to everywhere that you can buy a Coke. So it doesn't have to be big retail centers. You're looking for small but secure drop-off points, because you're talking about delivering really to every part of the country.
Yeah, and security is an issue. So
yes.
I mean, that's all. The shopping centres tend to have better security than some other places in town. Okay, there's a couple of questions from the audience which we should address. We kind of looked at it, but one of them is the potential for a flexible workspace type dynamic in the warehousing sector. Is that something that can be delivered? Are you delivering that? I mean, obviously we're seeing that in the office sector, co-working, but can you do that? Maybe Shamit, sorry, it's probably a question should be directed at you. But
I mean, when we say flexible when you would say flexible workspace, you mean flexible volumes in and out?
Yes.
So
yeah, I
very
mean, sorry,
much.
I'm misreading the question actually, but I guess that's the inference.
So that is very much the model that I think
indeed.
a lot of 3PL and 4PL service providers are offering now. So you will get billed just for whatever you're using.
Yeah. Okay. But Richard, you can't. Can you implement that in a shared space environment?
No, we haven't. But I mean, we're trying very hard to think of ways that we could, either ourselves or with a partner. I mean, I think one of the lessons we've learned is, even having designed our buildings to get down to much smaller minimum lets than I've done in other markets. Even then, particularly in those countries that we talked about earlier, where you've got large informal markets, you've got to find some way of passing on the cost savings that your building delivers to those people. And for that, you have to either go the 3PL route, and the 3PL has to be able to get flexible enough to actually lease out like one pallet position for maybe a relatively short period of time, or you need to partner with somebody who's going to do it through pure technology. And there are people out there looking at that. It isn't quite there yet. But it is a very interesting area, which I think could deliver could deliver the sort of savings we see from good 3PLs and good buildings and good transport to really small vendors and small users, rather than just well-funded companies, which is the guys who would take a minimum let from us. So very excited to look at those solutions yet. They've got a little way to go, but they're going to get there, I think.
And Paul, you got a view on that?
That's, I think, very similar to Richard. I mean, for us, it's not our market. I mean, it would be for our tenants to offer that service.
Okay. There's another question from audience here. How important is green or EDGE certification in developing occupier space? Do some tenants need it? Do they look for it? Is it? I know it adds to the cost marginally. Who wants to take that one? Anybody?
Well, our buildings, our shareholders make us do EDGE, but it's also the right thing to do. And I think if you are seriously chasing the big multinationals now as part of your product mix, and we certainly are, a lot of them are going to say you've got to have it. And I think to a certain extent we look at it as and I'm sure Paul looks at it the same way. We look at it as a sort of a competitive edge as well, because once somebody can offer it, you know, a multinational then must look at you more kindly than they look at the opposition, because if they were to choose a building that wasn't edge compliant over a building that was, then they have questions to answer, I think. And, you know, it's not, you know, that may sound an overly cynical view. You're doing the right thing, and you're ensuring your building has real long life. And as you know, our business model is to hold the buildings for a long time. So you want them to be relevant in the market when you relet them after 5 years and when you have to relet them after 10 years. And if you do that sort of compliance at the beginning, you know, you've got a much better chance of the building being relevant in those time periods than if you don't.
And Shamit, do you look for buildings with a sustainable building certification, whether it's EDGE or another?
Actually,
or are you just looking at numbers?
No. So I don't know if you know this, but Norfund is actually a shareholder in Freight and Time, and so that's a very big point of that we look for. But it's Richard says you have clients who want to see that you are moving towards longer, more sustainable solutions. So it is sort of the right way to move, and it's a long term. It makes sense.
I guess the same for you, Paul. I mean, unless you got anything to add.
Regulation is pointing it to that direction anyway. So if you don't do it now, at some point you're going to have to do it later. So it makes sense to look at it now, but it also does differentiate you from a lot of the warehousing that is industrial area, Mombasa Road. So it's a very important part to have it done.
Okay, Rani, anything to add there about green? I mean, green buildings or your developments?
Yeah, I mean, not necessarily on the buildings. We don't build them, but I think that just overall sustainable development is part of everything that we plan. Everything that we do, recycling of water, everything that we do in master plan, at least Tbilisi, has to be relevant in the future. Tbilisi is not something that'll be done in 5 years. It has to be relevant. So I think we all, and if nothing else, COVID has shown us that we really need to think about this, right? We need to think about environment even more. So I think that that's just become a baseline for us.
Yeah, and presumably in your infrastructure delivery, I mean, that's you're looking at sustainable solutions from your clients.
Yeah, absolutely.
I mean, that's
what we want. We're looking at it from a holistic way, from a power of water.
Okay, good. Okay, so I'm conscious of time. We're running out. I'm gonna ask you one more question with a short answer. So, are you pessimistic, cautious, or optimistic? And give a quick reason as to why you answer that way. So, who wants to start? Go on. Paul, do you want to start? Are you
yeah, for sure. No, I think we're very
optimistic.
Yeah, well, no, we're very optimistic. I mean, we're definitely in that corner. I think that the demand for grade A warehouses is growing and growing. So for us, I mean, if anything, we've had the right clients contacting us now. A lot of them, maybe the smaller ones, who weren't necessarily serious, have disappeared. So now we can concentrate on where the market is. So for us, we're definitely very positive over the next coming months and years.
Shamit, how are you?
Optimistic, very optimistic. I mean, East Africa is robust, and we can pretty much face any challenge that comes our way. And it is still going to be the fastest growing region in the world. So we will face this down, and we're going to keep going.
Excellent. Richard?
Yeah, no, also very optimistic. I mean, we just think the fundamentals of the asset class that we're in are compelling. They're compelling here because they're compelling everywhere else. It's simple mathematics. And I think, if anything, COVID just accelerates a lot of the trends which drive people towards those assets. So, yes, we feel very optimistic. I mean, sure, there are short-term difficulties like we talked about on construction to overcome, but I think you get your optimism from that long-term trend, and I think those are all securely in place, and if anything, are stronger than they were before.
Last word.
I too am very optimistic. not only necessary on the warehousing, which I think they've all touched on, but on also, on master plan mixed use developments outside of the city, because I think people are looking for space, people are looking for mixed use, not having to travel, be around in one space. And I think that gives a really good opportunity for mixed use developments. So, yeah.
Excellent. So,
Yeah, I mean, those sort of orbital developments have appeared in every city that's gone through the same development cycle that Nairobi's going through. Again, it's not, you're not reinventing the wheel here. It's the same development cycle that you've seen in cities that have gone through this cycle everywhere.
excellent. Okay, so thank you very much, panel. Thank you, Paul. Thank you, Rani. Thank you, Richard. Thank you, Shamit. Very much indeed. I think the overall opinion of the panel is very optimistic, highly optimistic, so onwards and upwards for logistics and manufacturing. Thank you very much indeed.
Cheers. Thanks.
Nick.
Good job on the moderating. Well done.
Bye, guys. Bye, guys.
Yeah, well done, Nick.
Bye.
Bye.